Tesla stock is all the drama in this market. We're going to talk about Tesla at the top of this video here today and why Tesla could be going to $80 or lower, says this prediction. So we'll run through everything in regards to this. I want to show you guys kind of what they're talking about, share my opinions and perspectives on that one. Then I want to take you through, I went to the Planet last night because it was 420 and I had a friend over and wanted to, get some stuff for them because it was 420, and so we went down the Planet, and I'll show you what I have seen at the Planet, which should be very interesting, okay? And then last up here, I want to get into Mr. Tom Lee, everybody's favorite bull, on where he thinks his market's headed, what does he make of everything, and all the drama that's going on out there in this one here today. Appreciate everybody joining me as always. Thanks so much for being here. I'll ask in return, smash a thumbs up. Make sure you're subscribed here to this channel, folks. Pin comment down there if you're looking to apply, join my private group, get access to all my best course curriculums, also get access to the 6- and 7-figure Discord chat, learn everything I got up here into your brain, okay? All right, so first up here, I'm going to ruin some of your days with this. I apologize. First off, let me just address that. For Tesla longs, like the true Tesla longs that are planning on holding this for the next 5, 10, 15 years, no one's day is going to be ruined by you telling them Tesla stock's going down, okay? Let me just be very crystal clear about that. Every real Tesla long out there is like, yeah, give me Tesla 80 or lower. You're not ruining our day because we're not selling tomorrow or next week or next year or next month. It's irrelevant to us. So the more shares we can get our hands on, the better. So I just want to say that. The short-term people that are trying to get in and out of their stock and play it for a trade, that might ruin their days. Tesla has been declining since November 2021. Yes, not in perfect pattern though. The resistance lines drawn from the first two peaks, November 2021 and January 2022, has been tested and failed 4 times since then. Stocks tend to move from the top of these channels to the bottom and back, unless there's a break in either direction. Look at the current trajectory of the stock. It looks like it's heading for $80 or lower, depending upon how long it takes to get there. So let's take a peek here at their chart. Tesla needs to break and hold the upper diagonal resistance to have any hope of recovering to all-time highs. That is currently at $240, and it gets a bit lower every day. Any price action under this number is just noise, and the overall macro trend remains down. So if we look at their chart and their lines here, okay, if this was to play out, maybe Tesla goes down to $80, $60, $40, right? If it plays out all the way over here, $0, right? Which is intriguing. So, there were some of these comments in regards to this, right? No offense, but this is the stock equivalent of astrology. Yeah, it is. But you got to understand a lot of traders actually make buying and selling decisions based upon the astrology. So yes. You mentioned the resistance line above, but you forgot to address the support below. Would seem the earnings report is a bit of a make or break, right? So, this guy says, hey, here's my lines here, drawing them here and here, which means we're likely going to head up now at this point in time, right? We're at our support lines. So maybe we're going to go back to 200, 220, something like that, right? This person says lines are fun, and they drew their own lines there, okay? Both your and my chart agree on the need to break $240. This person says, I highly disagree with this hypothesis because I like that. So to summarize, to go up, it'll need to go up. If it goes down, it'll continue going down. Brilliant, right? You gotta love this sort of stuff, right? And in regards to all this, guys, it's complete baloney. It's complete baloney. People can draw their lines wherever they freaking want to draw their lines, and let me draw my lines here, and every guy is going to have his different lines, and this is why it's going to be this, and this is why it's going to be that, right? And somebody's lines are going to look correct, right? Maybe it's Mr. Resistance guy, maybe it's the other guy, maybe it's 10 other guys that are going to draw their lines, whatever way they want to draw their lines. At the end of the day, people got to be confident that Tesla's fundamentals are going to be getting in a much better place over the next 1 to 2 years than they are currently. If that happens, Tesla stock is going to run, and it's going to have nothing, zero, like Robert De Niro, to do with any of this freaking line crap, okay? It's a bottom line with that. Technicals, only matter very short term in regards to traders making buying and selling decisions based upon technicals. It has no bearing. If this stock breaks 200 plus, it's not because of some technical data. It's because people got confident that Tesla's margins are troughing, the business is troughing, things are going to get better in the back half of the year and going into 25 and beyond. Okay? It's as simple as that. Now, on the flip side, let's say people are not confident things are getting better with Tesla in the next 1 to 2 years. Then there's going to be, guess what? Still a continued selling pressure on the stock. It's as simple as that, okay? And so, we can make it out to be this and that. All this stuff ends up being baloney in the end, okay? Now, something I do want to show you, I think I showed this in the main channel video recently, best-selling EVs in 2023. Look at that in China. Look at that in Europe. Look at that in the United States, right? And so with all the negativity out there, it's very important to remember who the top dog really is still at this point in time, right? Very important. I mean, because the way when you listen to these Wall Streeters talk about Tesla, I mean, gosh, the way they talk about Tesla, you would think in China, they're done. You would think literally they're like, the 20th best-selling vehicle in China. I mean, the way they talk about it. But how many of them are actually educated on the Chinese market? That's my other big question, right? Now, that's Tesla, right? So let's get into the planet, kind of what I have seen there, which there's a lot of changes going on with the planet. And then we'll get into Tom Lee in his opinion on where this market's headed. So one, they got that consumption lounge opened up. I got to take a quick peek in there. It was obviously insanely busy. It was 420 yesterday, so it doesn't come as a surprise to me. Pretty cool, like the way they did the door and whatnot. You wouldn't even know there's like consumption lounge there. It's pretty wild. But anyways, like that's great. But then they got this whole back part opened up there. They own so much real estate on that particular property at the Vegas location. So they must have had some sort of 420 event today. I don't know if they threw a little mini concert back here because it was kind of like this DJ booth type thing. And then these guys were all tearing all the stuff down that they had. And then they're talking about having an exhibit here over time. So this is just more real estate that Planet has back there, which is great to see. I mean, it's they got a lot to work with at that Vegas location. They also have a new tattoo place coming in that location as well, right? Where they do tattoos and piercing. That's going to be opening up very shortly here. And I mean, they just have so much real estate to play with there at that Vegas location. It's ridiculous. And in all those things that can attract more and more people is phenomenal. So they have the consumption lounge now. They have this area that they're kind of using for like events. Maybe it's like some sort of, I don't know what you're going to call it, like an exhibit over time they're going to make it into. I don't know what the finalized plans are there. Then you have a bar as well there now, right? You also have a place to eat there as well, right? And then you obviously have the massive Goliath store as well. And then I also noticed they open up this area called lockers, which is intriguing. So literally it's like a bunch of lockers. So I don't know, I guess you can put your stuff in there if you don't want to go enjoy it all in the consumption lounge, I'm guessing. But that was intriguing. I was like, oh, that's different. So there's that going on. As far as how busy was the store, it was extremely busy, which doesn't come as a surprise. I was there kind of late. It was, what time was that? 9-ish o'clock I was there last night. And I can tell you, a lot of people on 420 are already long gone by that time, okay? So 9 o'clock's really late for me being there. A lot of people are already having their fun, let's just put it that way. And it was still extremely, extremely busy. The busiest I had seen it in person in quite a while. Now, another important change they made with the Planet store is it used to be when you would come in here, you would have to sign in to an iPad, okay? And then you would get a text message that would say, register 64 is ready. And so you go up there, you talk to the tender, blah, blah, blah. Now, it's not like that. Now it's just you walk in, and then whenever you're ready to get in line, you just get in a line. And so there's like several different lines that kind of formed all over the place, which was intriguing. I don't know if it's better than the old way they had it or it's worse. I don't know. I'll probably have to go a few times in the future and kind of test it out. I don't know. Maybe it's a smarter idea. Maybe it's not as smart as an idea. I don't know. But there's got to be a reason they did it. There's got to be a reason they did it. I don't know what that reason is. Because the iPad idea was pretty good. Because then you get the text message and then you go up to that register. So I like that. And now when you went to the actual computer, they had to enter in your info there. So I don't know. Product, insanely cheap, like insanely cheap. It was, so got 2 chocolate bars, right? Big Dreamland chocolate bars. Then also got, I don't even know how to describe it. I don't know. It's like a product that you can enjoy, but it doesn't have the like the smell and stuff, all that stuff. So anyways, it was $34 before tax. After tax was $40. I'm like, that's like insanely cheap. Like, I don't even know how they're making money on this. I'm like, it was ridiculous. So part of that is also because I'm a Vegas local, and locals get discounts on that product. So that's something to keep in mind there. But I was like shocked. I was like, I did like a $5 free thing. So that added, so let's say it's $45. Still, I thought that was ridiculously cheap. So intriguing. Alrighty, so that's the whole planet situation, 420 yesterday. If anybody was enjoying that day, congrats to you out there. Let's get into this.
It's Professor Raghurajan, former IMF chief economist and governor of the Reserve Bank of India, a professor of finance with the University of Chicago Booth School of Business. Gentlemen, it's great to have you both on Power Lunch. And Professor Rajan, I want to start with you. Incredible just to see how quickly the market narrative has changed from expecting a rate cut in June now to some economists saying perhaps not at all this year. You've been in the seat that Powell is in, different country, India, but still I'm curious how you think he navigates this complicated scenario that we're in, which is hotter economy with inflation remaining much higher than expected, and at the same time, rates also staying higher, the impact that could have on consumers.
Yes, clearly what's happened is we've had 3 strong readings of inflation. One you can dismiss, certainly the January one, but the next 2 basically suggest inflation is not coming down. In fact, it's going up. And if you look at the measure that the Fed has looked at most closely, which is the super core measure of inflation, taking out housing, it's gone up at an 8.2% rate over the last 3 months. So this is something to worry about. Is inflation coming down steadily as it seemed at the end of last year, or is it having a new set of legs and moving up? So my sense is, they're going to do what they did, which is watch and wait. But, you heard, New York Fed president talking for the first time about potentially rate hikes. I think that's still some ways away, serious talk about that. But clearly, the kind of rate cuts that were expected are off the table. Certainly in the next meeting, they have no more news on inflation or the labor markets. And it's likely they will continue pausing, but how long they will pause is now very much in question.
Tom, Professor Rajan mentioned John Williams, New York Fed president, who did just mentioned rate hikes, but he did said that.
Before we go further here, let me say this, okay? And I said this in a video, it might have been on this channel or the main channel recently, okay? Anybody that makes a buying or selling decision of stocks based upon what they think the Federal Reserve is going to do is making a very, very epic mistake. Okay? The Federal Reserve does not know what they're going to do 3 months from now, 6 months from now, 12 months from now. So you can't know that. Okay? Anything else is just a guessing game. That's just a gamble. You're just taking a gamble. Oh, maybe they'll cut this time, so let me sell stocks or let me buy stocks. It's not worth it, guys. The Federal Reserve is consistently wrong in what they think is going to happen. People are consistently wrong. The most expert people in the world are consistently wrong. So once again, to buy or sell stocks, to make your investment decisions based upon if you think the Fed's going to cut, if they're not, anything, it's just a poor investment decision. And then you can even play that out over time. The Fed started cutting, what was that, 2007? The stock market still fell 50+% by the trough at end of 08 into beginning of 09, right? So, yeah, you started buying stocks because you're like, ooh, the Fed's cutting, yes. And then your stocks crash 50+%. So it's just a silly game, man. Like anybody that just is trying to make their buying and selling decisions based upon what the Fed's going to do or not do is just so lost.
Not his base case, but even the fact that he mentioned it, you saw the 2-year move to around 4.99%, which is a high for this year. You still have this notion that stocks can continue to outperform if rates stay high. How long do you think that theory will last?
Well, I think it's going to be valid as long as one of several things happens. One is that as long as the economy remains resilient and robust, and so far earnings have actually been coming in quite good. I mean, we're only sort of at the start of earnings season, but already Q1 looks good. And I think the second is that inflation, I think inflation really has a bifurcation taking place, because even as the professor cited Supercore, the reason Supercore is annualizing at 8% is auto insurance. If you took auto insurance out of Supercore, the long-term average is around 2.7, and it's actually annualizing at around 2.7% right now. So
Boeing's
the
in
biggest
the 160s?
driver of inflation are the two stubborn components of auto insurance and shelter. So I don't know if Williams really wants to be raising interest rates or hiking just because auto insurance rates are high. And I think the third thing to keep in mind is that we don't really need the Fed to make, 3 cuts. I think the one risk to markets would be that the inflation is accelerating to the point where the Fed has to hike and therefore really weaken the economy. I think that's still very much a tail scenario, but that's the one, of course, that would unsettle markets the most.
So this is one frustrating thing I have with Tom Lee, and I mentioned this somewhat recently. Tom Lee is consistently making excuses for inflation, right? And I feel like, us bulls have been making excuses for inflation for it feels like a year and a half, 2 years now at this point in time. Oh, it's only so high because of this, because of that. It's always something, right? At the end of the day, the CPI number is what the CPI number is, okay? And so we can keep trying to say, well, auto insurance was really high, or this was really high, or this is lagging. We're always making all these excuses. But at the end of the day, we're not in the 2s. We're still in the 3s, mid-3 at that. And, we can't just keep making excuses and saying this and saying that, right? Because it's a silly game. Because then when it comes in lower, the bears could easily play that game as well, right? And say, well, it's only came in at 2.7% because oil was down so much over the last year, and that's unrealistic. You can play that game both sides. At the end of the day, it's a foolish game to play. Just look at the numbers, look at the data, and either you're too high with inflation or you're not, and you're where you need to be, right? That's it. That's it. Okay? Anything else is just, trying to make too many excuses for either side.
Professor Rajan, how critical is China's recovery to global economic performance?
Well, it certainly is very important, right? China has been the engine of global growth for a long time, pre-pandemic. But I think it's also important for, the reflationary forces we're seeing. I mean, if you look at commodity prices, they were largely dead in the water for the last year because China wasn't performing up to expectations. As Chinese growth news is getting better, you're seeing some commodities perk up. Certainly, you're seeing copper pick up some in recent weeks. So my sense is that the deflationary effects of China, which have been substantial, especially on the goods side, may abate a little bit if Chinese growth picks up. And of course, it will also add to global demand, which is important.
It was back in 2005, I believe, Professor Rajan, where you had called.
But China strengthening could also be a big problem. Do you know what that problem is? Problem is inflation. If China keeps, let's call it, their economy strengthens a good amount over the next 1 to 2 years, then there's a view that oil prices should go up considerably, natural gas prices should go up, commodities should go up because China is then strengthening, which is then inflationary, right? So it's a positive, it's a negative at the end of the day, right? I mean, at the end of the day, strong economies are better than not strong economies, but when you still have an inflation problem, it can also be a problem for you.
We had said that the U.S. financial system is facing great stress, and then a couple of years later, we saw this great crash in 2008. When you analyze the U.S. economy, where we're at, where Treasury yields are trading, do you have similar concerns?
No, I think we haven't seen the last of the mini crisis we saw in the banks in March of 2023, in the sense that a lot of small and mid-sized banks are still sitting on long-dated assets. And this is where, higher long bond yields could result in some of them having to mark assets to market, even some below the value of their equity. So some of them may be underwater. We aren't still out of those woods. We have sort of alleviated the immediate panic, but some of that is a source of concern. Of course, sharp movements in markets almost always create problems somewhere. It's hard to know where, what big bets are the shadow financial system taking now, which hedge funds are extremely ill-positioned for a sharp movement in interest rates.
That's fair.
But that could also happen. But so far, we haven't seen the kind of turmoil play out, for example, that we saw before the global financial crisis. And I think it's, as our other participants said, at this point, a tail risk rather than the central scenario.
Tom, back to you with a question on small caps, which you say will probably outperform the S&P 500 by 50% this year. A lot of people have been predicting that the day of small caps is going to arrive.
Tom, when is this freaking day, man? Come on. I'm getting so excited, but it's just never comes.
Why are you so confident right now when it has taken so long for that sort of prophecy to come true?
Well, that's quite a prophecy, right? I think we're exiting more than a decade of underperformance of small caps versus the large caps, and now we're at a point where the risk reward is so attractive. Investors really should be thinking about them. We hadn't really recommended small caps for several years until this year. First, on a price to book basis, which is really the most important measure, they're trading at 44% of the S&P, right where they were in 1999. But projected growth this year is much higher, with median earnings growth in the Russell 2000 of around 19% for EPS versus 11% for the S&P. And on forward PE, you're paying 10 times the median PE for the Russell 2000 against S&P around 16 times. So kind of multi-decade low in valuations, better growth. But of course, sort of the timing accelerant is when the Fed can really conclusively begin to cut rates. I think that's one reason why small caps have really been hurt in the last couple of weeks, is that delay.
Tom, thank you very much. We appreciate it. Professor Rajan, thank you as well. Meantime, coming up.
Yeah, 100%. And I mean, at the end of the day, when it comes to smalls, they're primed and they're ready to go. It's just, and they're going to go, but to get the exact timing right is difficult. That's why I'm not playing any call options on the Russell 2000, because I'm looking at it and I'm like, it is very tempting to buy some year-out Russell 2000 call options, but I'm like, maybe who's to say you can't stay at this sort of valuation for another year? And then you got these calls on the Russell, and they all expire worthless because you're like, how is this another year? Russell's, you never know with that. So it's like you can play from the long side if you're playing over the next 5-10 years. It is insanely attractive. But to try to get the timing perfect, it's a rocket ship, and it will go when it's going to go. But to predict exactly when it's going to go is it's impossible. Just to be quite frank, we just know those stocks are very attractive and they're very undervalued. And when smalls finally roll, it's going to be a lot of fun. But we might be waiting still more. We'll see. Okay. All right, guys. Appreciate you joining me as always. Thank you so much for being here. Hope you enjoyed today's video. If you're looking to apply, join my private group this week. Get access to all my course curriculums, 6- and 7-figure Discord chat, all that sort of stuff. That will be the pinned comment to fill out an application. We can see if you're a good fit to join us in there. We have investors from all different ranges in there. People that are investing with their first $10,000, $20,000. We have people in there that have 6 figures, that have built up to multi-6 figures, 7 figures. We've had a lot of people join over time that started with 5 figures and they just kept building and building, and now they're like multi-6 figures. People that were 6 figures and they joined and then they kept building, and now they're in the 7-figure club and things like that. So you definitely get a lot of value out of that. That's a pinned comment down there to apply to join us in there. Much love and have a great day.